Hi everyone. In this video, I'll be discussing about target costing, which is one of the important topics of performance management, that is PM paper of ACCA. In your management accounting paper, you would have come across this target costing just theoretically, but here in performance management, you have to make all your calculations. That is, you have to find out your target cost. You have to find out the cost gap. That is, you will calculate your expected cost of producing a product, then compare it with the target cost and expected cost, and then conclude on what are the control procedures you can make in order to control the cost of producing the product. So now we will look at that in detail. I have also provided a video on activity-based costing. I have provided the link in description. Hope it will be useful. Those who ever has not watched that, you can watch that video as well. Now getting into target costing, let me share my screen. Okay. So basically here, why do we have this target costing? Why it is important and what we are going to do actually as per target costing? Basically, how do we get the cost of a product and how do we set a selling price for a product? Normally, the method we use is we arrive at the total cost of the product, that is, total cost of producing a product. This will include all the material cost, labor cost, and other expenses that are going to be incurred in order to produce the product, right? Then once we have arrived at the total cost of producing the product, what we tend to do, we have set a markup of profit over this total cost. So what is this? This is going to be the profit, right? I have also provided a video regarding markup and margin concept of designing the profit. So I have also given the link in the description. Please watch that before you watch this video. So we set a markup of profit on our total cost. So this is the profit that we require for selling the product. Now the total cost of producing the product plus the markup profit, that is the profit that we require in order to sell this product. This is going to be your selling price. So selling price of a product is set on this method. Normally, this is going to be a traditional method. Traditional method is where you actually calculate the total cost of producing the product. Then this is my desired level of profit that I want. So you mark up profit. For example, if total cost is going to be 100%, then you have a markup of 25% and then set your selling price, right? So this is the markup method where this is the traditional method. You ascertain your total cost, then you set a profit and then derive at your selling price. Here, you're not going to look at the environment. You're not going to look at your competitors. There's no view on the external environment. So basically, you're going to just look at your own business. So this is the cost of producing my product. I have materials, labors, and other expenses. So over and above this, I need some profit. So I make a markup and then I'm going to sell my product at this price in the market. This is a normal traditional method. But will this be helpful in the modern environment, that is the changing environment? No, right? You have to adapt yourself to the changing environment. You have to uh, also look at the market forces, whether you are in a correct market position, what is the market share you're going to hold in this environment, right? So, in order to compete with your competitors in the market, you have to adapt yourselves to the changing environment. Now, we are coming with a modern approach here by using target costing method. So now under target costing, what we are going to do, first we will set our selling price. Sorry. So we are going to set the selling price of our product first. Basically, the traditional method was a bottom up approach. Why? Because we first took our total cost, then we ascertained the profit that we need, and then we got the selling price. So from the bottom we are going, that is total cost plus a markup profit plus your so is equal to your selling price. So this was the bottom up approach. But under target costing method, that is the modern approach, we are going to go with top down approach. So this is where you set a selling price, and then you will have a margin over it, and then you will derive at the target cost. So basically, I'll explain what it is. Selling price is going to be first fixed, right? So how will you fix the selling price? This is going to be dependent on the market demand and supply. So you will see all the market forces at what cost actually your competitors are going to sell their product. You have to compete with them. So your selling price should be more or less the same amount. And then you will also look at your demand and supply in the market for the product, and then fix your selling price at market selling price. Right? So now you have arrived at your selling price. So this is the cost at which I'm going to sell my product into the market. Then you normally have to sell it at a profit, right? So now you will come across with a margin. You will fix a margin. So this is the profit. This is going to be the selling price. Within that, I need a profit of a certain percentage. Then what you will do, this is the profit that you have set. Now from the selling price, you will subtract your profit that you require and arrive at the cost of your product. This is going to be the target cost. See, first in your traditional method, we know our total cost. Then whatever was the cost going to be incurred for producing the product, we know that completely. We did not take into consideration our market conditions. We didn't look at our demand or supply. We just know what was the cost incurred for producing our product. Then we just looked at our business. But now under target costing method, you're going to look at your market conditions, the market demand and supply, and you're going to fix your selling price of the product at the market selling price based on the market factors. Then you cannot sell your product at the cost of producing it. You need some profit. So from selling price, you're going to have a margin of profit. Then once you deduct your selling price, your margin from your selling price, you will get the total cost of the product. So this is going to be the target cost, which means within the cost that you have arrived. For example, if you had arrived at a cost of target cost of $100 means you have to complete the production of your product within the cost of $100. Only then you will be able to get this profit by selling at this market selling price. Clear with the concept? If you are not aware of this markup and margin method, please look at my video and come back to this video. Now I'll go with an numerical example to understand better. So this is going to be production and sales of product A, for example. So the selling price is $125 unit. So how have we arrived at this 125 per unit? This is based on the market demand and supply. So based on the market conditions, we have arrived at the selling price of the product. So this is going to be 125 per unit, which means if you're going to produce this product A, you are going to sell it at $125 per unit in the market. So this is the selling price. This is the first step that we have arrived at. You have got your selling price now. Now what we will do, I told you we have to set a margin of sales, margin that is profit percentage on sales. Now your business needs 25% of profit on your sales. Let's start calculating. So your selling price is going to be $125. Then your company decides to have a profit of 25% on your selling price, that is margin. So what is 25% of 125? it's going to be around $31.25. So this is the profit that I want. I'm going to sell my product at 125. Out of that, I want a profit of 31.25, which means how much cost should I incur in producing the product? It's going to be 93.75. To understand, this is the cost within which, that is $93.75 is the cost within which I should produce my product. That is, one unit of my product A has to be produced within $93.75. Only then I will be able to get 31.25, that is 25 percentage profit if I'm going to sell my product at $125. Basically, what you would have done in a traditional method, you would have just arrived at your cost, then fixed a profit, and you would have sold at a selling price. Here, you took the market conditions and you have arrived at your market selling price. So, this is the first step we did. We had our selling price arrived. Then, out of that, you're going to fix your profit. This is the profit, $31.25. I need profit if I'm going to sell this product at 125. And so, how much if I have to earn 31.25 of profit, I should incur only a cost of 93.75 in order to produce my product A. That is one unit of product A. So will that be possible? This is the assumption we have made now. Now, you know what are the material costs that you're going to incur, the expenses, the labor costs that you're going to incur. Now let's calculate what will be the expected cost of producing your product A. Expected cost of production. So how are we going to calculate this? Here we have, so far we have seen only till this. Now we have cost information as follows. These are the actual costs that you're going to incur for producing product A. Now M1 is, I have to, three materials are required for producing product A. So I have mentioned it as M1, M2 and M3. So material 1 requires 10 meters at $48. So you need 10 materials of M1, material 1, in order to produce product A. So 10 materials is going to cost me $48. So let me note that down. M1 is going to be $48. I'm not going to multiply 10 material into 48 because all this 10 material I'm going to purchase at $48. Okay. Then 2 meter square at 17.50 per meter square, which means for producing product A, I require 2 meter square of material 2, and 1 meter square is going to cost me $17.5. So if I need 2 for producing one product, I have to multiply it. So M2 is equal to 2 into 17.50, which is equal to 35. $35. So M1, 10 meters, all the 10 meters together, it's going to cost me 48. So I directly took 48. Then M2, material 2, I need 2 meter squares for producing one product of product A. One unit of product A. So 1 meter square is going to cost me $17.5 in the sense 2 meter squares for producing one unit will cost me $35. Then what about M3? I need 1 meter to produce product A. That is $1.5 for 1 meter. So I'll directly take that. So $1.5. Then I have other information here. Labor $7 per hour. Requires 2 hours to produce 1 unit. So how much hours we require to produce 1 unit? It's going to be 2 hours. And per hour labor are going to be paid at $7. So 2 hours into $7 is equal to 2 hours into $7 is equal to $14, right? Then we have variable overheads. variable overheads is $1.50 per labor hour. So how many labor hours? Totally 2 hours to produce 1 unit. And here you have 1.50 variable overheads per labor hour. So your variable overheads are based on your labor hour. So 2 into 1.5 is going to be $3. So now this is going to be your expected cost. So what is the total? 48 plus 35 plus 1.5 plus 14 plus 3. It's going to be $101.5. Now we'll make an analysis. So expected cost of production expected cost of producing product A is going to be $101.50. Hope you understood this expected cost of production. So material one required $48. Material two, $17.5 per meter square. We require 2 meter squares for producing 1 unit. So 2 into 17.5 was $35. And M3, we required 1 meter. So 1 meter cost was $1.5. Then labor, we required 2 hours of labor for producing the product, 1 unit of a product. And the labor were paid at $7. So 2 into $7 is equal to $14. And variable overheads were also based on the labor hours. So one hour is going to be $1.25. So labor hours were 2 hours. So 2 into 1.50 is going to be 3. So the total cost of expected cost of producing was 101.50. Now we'll compare this with the target cost. What did we arrive? We had a selling price at 125. We had a margin, 25% was my requirement of profit. This was my required profit. So if I subtract that, I got my target cost at 93.75. So target cost is going to be 93.75. Now, what is the expected cost of producing the product A? It's 101.5, which means after you have arrived at the cost, these are the materials I'm going to use. This is the number of hours I'm going to engage my labor in order to produce 1 unit of a product. You have arrived at an amount. I would normally incur 101.50 of dollars to produce 1 unit of product A. So this is my expected cost of producing product A. That is 1 unit of product A. But as per the market conditions, if I'm going to set my selling price as 125 and to have a profit margin at 25%, I should actually incur only 93.75 total cost in order to produce product A. But how much I'm actually incurring? I'm actually incurring 101.5. But how much should I incur? I should incur only 93.75 in order to get 25% of margin. So now what is the difference between my expected cost of producing product A and the target cost? 101.5 minus 93.75. It's going to be $7.75. So this is your cost gap. So when I started with the video, I told you have to find out your target cost. So this was the target cost that we found out. Then we found out our expected cost of production. Now we are making the analysis. So what is the difference between my expected cost of producing and the target cost? So this is going to be the cost gap that I told you. This is the third step we are going to do. Expected cost was your second step, right? Now we have found out the cost gap, which means you have to incur only 93.75 in order to produce 1 unit of product A. But you're incurring 101.50 in order to produce 1 unit of product A, which means you're incurring $7.75 more than your target cost. That is 7.75 higher than your target cost. So what you have to do now, you have to reduce your cost by 7.75. You have to produce your product only at target cost. You have to make all the control procedures. Now, what you will do, you know your expected cost of producing product A, you know your target cost, you have found out the cost gap. So, you have to come out with a solution that I have to produce my product within this $93.75. I have to make some changes so that I can reduce my cost of producing by $7.75. How can you do that? You can come out with some strategies like getting the materials from other suppliers who can provide you at a lesser cost. So normally these are going to be your cost, right? Three materials you are going to obtain. Basically, uh, you cannot reduce the labor hours. If you're going to reduce the labor hours, you have to engage more number of laborers. So anyways, the cost is going to be more with regard to labor, right? So you cannot compromise with the labors, but you can make some strategies in order to change and reduce the cost as per your materials are concerned. You can go with a different supplier who could provide you the materials at a lesser cost so that your total cost will go down. Total cost of production will also go down. Otherwise, you can, and one more thing, if you're going to go with a different supplier, you should not compromise with the quality. Just because you're going to get your products at a lesser price, the materials at a lesser price doesn't mean you can compromise with the quality of the product. If you're going to compromise with the quality just because you wanted to bring your production cost within the expected target cost, it means that the customers will be dissatisfied with your quality of the product. You will lose the sales. Finally, what that could have an impact? It could have an impact on your reputation. Then you will lose the market share. You will lose the market position, right? So you have to find out a supplier who can provide you the same quality material, maybe at a lesser cost, so that your total production cost can go down. Other strategies can be, if I'm going to produce product A in one kind of a method, in one kind of a form, can go with some other strategy. Maybe I can find out which of these materials I'm going to get at a lower cost. I will use those materials more in order to produce my product A. So the output would differ. It will not be the same output like what it was first. Maybe with some kind of restructuring or some kind of a difference, I can produce product A by giving a different output in the form of a different output. So I can come with different kind of strategies and control my $7.75 that I'm going to incur extra, incur more than what is the target cost. This is how target costing works. So basically, what is the whole concept that we learned? As per traditional method, we will be having a total cost. We will asset in whatever is the cost. So total cost we have here, right? Whatever is the material cost, labor cost, totally we will total. And then, for example, even in this question, we can take, we had the expected cost of production, right? So if it was a traditional method, what I'll do? So this is my cost. Over and above this, I will have 25%. So what will be the 25%? To 25% is going to be 25.375. Now I'll add this. So 126.875. This will be the price at which I will sell my product. This was the way in which I would have calculated based on a traditional method. I would have calculated my cost. Over and above this, I would have had a 25% markup of profit. So this is going to be my profit, expected profit, and I will fix my selling price. But your competitors in the market are going to sell their products at dollars 125. So your customers will tend to go with the same quality. If your competitor is going to provide the same product at $125, they have a profit of around 1 point, yeah, 1.875, around $2 of profit they can get by going to your competitor, right? So now you have to come up. This is why we are going to use this modern approach, that is target costing. This is not relevant. You cannot go with a higher price if you have to adapt yourself to the changing environment. If your competitor is going to provide the product, sell the product at 125, you should also sell at 125 or at least less than that in order to compete with that person, right? With that company, right? Now you cannot use this method. That's the reason we are coming with a target costing where you will take the market selling price based on the demand and supply. Then you will fix the profit. This is the profit I require. Basically, the profit is going to be higher. You're going to fix the profit that you need. Then you will arrive at the target cost. So this is the cost within which I have to produce my product. Now you will make the expected cost of production will be calculated. So this is the total cost at which my at present procedures are going to incur almost this much cost of producing one product. Now we will find the cost gap. What is the actual cost I'm going to incur for producing the product? What I should incur in order to compete with the competitors? You will find out the cost gap. Now you will come to a conclusion through analysis. What are the strategies I can do in order to reduce my total cost of production by $7.75? Okay, so this is basically target costing. Hope you have understood this concept. If you have any doubts, you can post it in the comment section, and you can also follow me on LinkedIn. And you can also direct message me on LinkedIn if you have any doubts. So hope this video was useful. If you have any doubts with markup and margin, please look at the video that I have given in the link. Watch that video and then watch this target costing in order to have better understanding. You can also watch activity based costing video. It would be useful. Thank you.